The S&P 500 has surged over 11% in less than 3 months. So mom, pop, and the Joneses are all rushing back to risk. The ultra rich want in. The positioning in bellwether mutual funds has virtually never been so bullish. Word is getting around about stocks, music to the ears of Wall Street. Investors are jumping on momentum and riding the rally. This time, it's going to continue forever. Not that some enthusiasm is warranted. The S&P 500 is up 30% this year with dividends. So ladies and gentlemen, Elvis and the stock market bears have left the building and are nowhere to be seen. So let's take a look. This chart from RBC US Equity Strategy shows the results of a recent survey. From the survey, people describing themselves as bearish dropped to 15%. That's the lowest level since the third quarter of 2018, just before the rout that sent the S&P 500 down 19.8%. At the same time, the ranks of the bulls has swelled, creating the largest gap between optimists and pessimists since RBC began collecting the data. And then the latest survey of fund managers from B of A Global Research showed that expectations for global economic growth jumped the most on record, while investor allocations to equities rose to the highest level in a year. Meanwhile, B of A found cash levels among those surveyed are at their lowest level in 6 years. And as you can see by this chart here, Elvis and the very bearish of the stock market bears have left the building. And then this chart here, also from RBC, it shows the asset managers' notional net long positions for U.S. equity futures. These are institutions, institutional investors, pension funds, insurance companies, and mutual funds, etc. In simple terms, at least for me, it shows that the professionals are at record levels of euphoria. And if the market keeps trudging higher in the near term, these are likely to be important signposts that may help mark the top of the market. But not yet. Global economic data has shown signs of bottoming, and a strong U.S. labor market should keep consumer spending. The Federal Reserve has vowed it's on hold after 325 basis point rate cuts this year, and it's expanding its balance sheet by the week. This isn't likely the blow off top. Rather, it's just more froth. And if you stand in the way as a contrarian, you'll get plowed over. So it's not time to raise the red flag, or the white flag for that matter, but just be aware of the market sentiment, which for now is still rising. So let's now go take a quick look at the charts. And we're looking at the 20-year monthly chart on the iShares Russell 2000 ETF, and the symbol is IWM, and the close on Friday was 165.97. And we're looking at the Russell 2000 simply because the Russell has been the laggard of the major indices. And if the Russell 2000 can base bottom and head into rally mode, then that'll be a confirmation that the stock market in general is in a rally mode. And spoiler alert, we're in a rally mode. Now, I want to look at some similarities here, not necessarily the similarity in the price chart. The similarity is more in the MAC, but I wanted to look at the price chart here, just show you this small cup and handle back there in the 2015-2016 time frame. And that's what I'm looking at for a possibility here currently. Another cup moving on up. We'd have to get up here and then create the handle. But that's one scenario that I'm looking at. Now let's go here into the MAC, and you can see these similarities between this time frame here and the current time frame. Basically, the fast line moved on through, did a basing bottoming pattern, and it's heading on up, just barely poking through the slow line there. Both the fast line and the slow line are at about 3.5, and that's a little bit elevated. So it's reasonable. It has some strength, and I think things can continue. We have a nice trend line moving up there, and I think that fast line is going to head on up. Is it going to be a straight line? No. I'm looking for a bit of a pullback, but it is tough being a contrarian. So be careful. I have about 3/4 of my money in the market working for me with 25% on the sidelines just in case. So hopefully you have set your portfolio up for some possible opportunities. The histogram looks fine. Moving on up, I think it's going to cross through that zero line real soon. Into the price rate of change, this looks good too. Nice basing, bottoming with the fast line about to move up. Into the relative strength, we're at a moderate 62.23, but definitely the line has moved off that 50 or midline and heading on up. Into the stochastics, pretty much the same thing. Volume, volume has been trickling down, so that's something to keep an eye on. But for now, I don't think it's causing any problems. And then the Williams is telling us that the price chart is going to follow. The Williams rocketed up into that overbought territory, and so I expect the prices to continue. But looking at, say, just the MAC here, I'm looking for a time frame of about a year of a rally. But I can change that, or I will change my opinion if I see something turn at some point in time in the future. But for now, that's my expectation. And things do look pretty good. Moving back to the price chart, and I'll also be looking for that cup and handle to see if that forms. It may or it may not. But if we do have a pullback, that's going to be the handle. So keep your eyes out and have a great weekend. For today, that's ChewDog Charts. Thank you.